Hey everybody, how we doing? Happy Thursday. Interesting day in the market. A little bit of uptick, melt up, whatever you want to call it. Quiet overall, just a little bit higher than where we were this morning, but everything gapped up and stayed up. So we have S&P up around 0.7%, Nasdaq around the same 0.7%. Equal weight actually coming out swinging today, 1.32 on the Nasdaq equal weight and 1.22 on the S&P equal weight. So not too shabby. Price weighted Dow at 0.6%. Russell swinging hard today, 1.57. Not a bad day overall for the broader market. Feels kind of nice that it's something different. We saw some Mag 7 sliding around. We saw Tesla, Meta, Microsoft, all with kind of different reactions and price. So let me go to the heat map right now. And we are seeing Microsoft down, 6+%. We've got Oracle up, which I actually read an interesting article that showed the exact opposite. Oh, Microsoft is better suited for this and Oracle not. And yet we're seeing the exact opposite. So technology, we got Microsoft down, Oracle up, Adobe up, Palantir up. That is Palo Alto up. NVIDIA down slightly, 1.26%, but Broadcom is up. Tesla's up to 405. Okay, but I need it to be to like 420, 425. Planning on like a $40 move. We didn't really get that. It was a really quiet earnings print for Tesla. Meta, I did end up taking some profit. We ended up breaching my 702.50 level. I grabbed a really small profit on that earnings play that I took on Meta. Google still hanging near the all-time highs. So mostly green. I think that we have some deep red in Microsoft and Nvidia flat. So this kind of back and forth. Does the market want to get out of Mag 7? Does it want to get out of the high concentration? Probably, but it's just finding ways to do it. So I think any type of risk off flows maybe go right back into Mag 7, but otherwise, if the market is kind of favoring a little bit of a drift higher, then it's putting money to work elsewhere with things that aren't quite as concentrated and as valued. Walmart's doing pretty well. I actually may end up looking to roll Walmart right now. I've got a $100 by 80 collar trade with the shares that I own. Break evens around $90.88. I mean, getting it called away at 100 is not the end of the world, but I want to take a look at that right now. So let me go to WMD, and there are the shares. So I bought shares. I have a collar at 100 by 80 out to March. Let me take a look here. If I were to roll, so I could roll out to April. I don't have any other expirations there. Nope. March 21st to April. So I don't have any other expirations. Fine. Not my favorite. But could I roll this April or May? When do we already have earnings on Walmart? Let me check. Walmart earnings. It's going to be a couple weeks out into February 20th. All right, we got a few weeks on that. I'm going to try to buy myself a little bit more time. March is already far enough, but if I go out to April, I'm relatively confident that kind of playing defense this first half of the year, as long as nothing crazy happens, I think the second half of the year kind of gets a little bit easier. Perhaps that we see inflation truly trending lower, and we get through some of the tariff noise, and we kind of settle back in to get ready for Trump for the next 4 years. And inflation doesn't rear its head. The U.S. 10-year doesn't break. 4.5% to 5% is going to choke out some growth. We certainly, if we get above 5%, I think that wreaks havoc on the markets. I think that's going to be a big event coming into bonds or the equities market. It's going to make equities way less attractive if you see that just a 10-year yield is at 5%. That's going to make a lot of people want to take a lot less risk because, even the average 8-9% return, net fees and taxes and everything, it's like you're barely getting ahead. Gold is doing pretty well. Bitcoin's a nice diversifier with risk capital. Anyway, I'm just talking. So if I go out to April, getting 68 cents, it gives me about $140 of extra income on that one. I'm going to try to roll this out one more expiration to June. June. Could I go? So here's one thing I could do. If I want to go out to June, I can do this for a small credit, about 12 to 14 cents. But I increase my profit potential by $5, and I still have a long call, or I'm sorry, a long put for protection. I am having to move that long call out a little bit. So that's going to be a debit. That's going to be a credit. A 105 gives me an extra $5 of income on top of the credit. If I moved it down here, I get the extra $2.24, keep the strike the same price. But if Walmart's heading into the $100 zone, I'd like to take a few more bucks out of that. and that would be 90, get it called away at 105. So I'll take away whatever, 15 cents or something. Let me do the math. So if I did 90.88 minus 14 cents, but get it called away at 105, I'd make 14.26 on 200 shares. It's 28.52. It's like a 1% position. Moving the entire account 1%, not too bad. Now, obviously, if Walmart comes down and comes down aggressively, that's why I do have the long put. I want to be tracking that long put because I'd be protecting profit into this $85 to $80 zone. With earnings coming up, we never know what's going to happen, but there's been mostly solid, steady growth for Walmart. We had a little episode back here during earnings when it was positive, and yet we saw the stock drop from 56 down to 52, which seems like nothing at this point since we're trading up to $100 now. But I still like the dynamic support of Walmart. I think this Amazon and Costco, three of the largest retailers in the world, and we'll continue to see some decent price action. We do have a pretty high bar count though. It's comparable to the S&P. We are stretching away, so there's 277 bars, which isn't massive, but the stretch away move is getting pretty high. We're 20% higher than the 200 moving average. So not calling the top, but if it breaches 100 and keeps going and then blows out through earnings, I mean, I don't know. Maybe March isn't a bad spot. And I say that because again, I know last year wasn't an indication of how this year plays out, but April was a pretty bad sell-off. Going into this summer, nothing really crazy is going to happen with the Fed until June. So I don't know, whatever, man. I'm just going to roll it. I like it. 105 by 76.67. I will get maybe 12 to 14 cents for the roll. As long as I can roll this for credit, that gives me another $5.14 of profit. Which if I do that on 2 contracts, that's pretty good. That's an extra $1,000. So I'm looking to take that. Is it ever demoralizing opening up these charts and they're all going straight up? I mean, yeah, there's a lot of stocks that look like that last year. Look, I've been trading for a long time. It is what it is. I just know that if the chart looks stupid, I'm not chasing it. I mean, Walmart looks stupid. Like this chart is ridiculous. But I mean, I have the shares of the break even at 90. So I mean, my ownership price is here, right? And if it goes higher, I still take advantage of some of that, maybe not all of it. But if it comes down, I have protection to lower my cost basis. But the issue is why would it come down that severely? If it comes down this severely, something tells me we got bigger problems than just Walmart. If we see a tried and true resilient stock, drop about 19%, 20%, that would be awful. So what else would be happening in the world for Walmart to drop 20%? I mean, I'm sure the indexes would be going with it, maybe not to that extreme because stocks are going to be way more volatile than the actual indexes. That's the point of having a basket. That's the point of having the haystack. But yeah, I mean, we look at a lot of stocks that are going straight up. It is frustrating. But what do? Here's a good example. Palantir. Okay. I could not for the life of me last year own any more shares of Palantir than when I bought it back around $10 on a breakout and closed it out around $20. Okay. And so what did I do for Palantir the entire time? I did a lot of put spreads. So bull put spreads, bull put spreads, bull put spreads. And what ended up happening? Stock kept going up, higher highs, higher lows, higher high, higher low, and then it just got parabolic. And so the whole time this was happening, I refused to sit here and say, I'm going to buy this thing. It's like when it was going up, I was just trying to get a dip or a pullback to get an entry to go back to the all-time highs, which are around $45. And it just blew through that. So I mean, yeah, sure, I missed out a lot. But when I had income after income after income trade, rather than tying up, 10, 15, $20,000 and trying to make as much money, it's like, it was a great stock. It was the best performing stock last year. But if you can't pick Palantir every single year, you're probably going to lose money, right? I mean, if you can't find this stock and have this thing go up 300, 400, 500%, 1,000% in a year, what are you doing? You're chasing the next Palantir, and the reality is it just doesn't happen. That's the needle in the haystack. And I'm more of a believer that there's other ways to trade. I can make a lot more money with a, half to 1% risk on a mechanical play without having to speculate and find the perfect stock in the perfect environment. That's way harder, right? So, I believe in market efficiency, and I believe there's ways to trade and generate income without ever owning really any stock. And this, I just try not to worry about it because otherwise it's just classic FOMO and you feel like you're not doing enough and you should be chasing the markets and you should trade everything that Nancy Pelosi has in her portfolio. But it's like when you see a stock like that, you just, okay, man, this is wild and crazy. So what am I doing right now in Palantir? Well, I'm giving it a chance for an earnings play, and that's it. Otherwise, I have a bunch of ratio spreads, and I'll still generate an extra $3 a contract, and I'll make a few bucks, and I don't have to own anything. And if it comes back to reality, well, when would I buy it again? Well, if it comes back down to this previous high to offer up new support, then at $50 or less, I would gladly scoop up some Palantir longer term. But if it just goes higher, I'm sorry, I'm not going to chase it. So fundamentally, this stock is not valued at over $50. Okay. I mean, based on discounted cash flow, like the earnings are, I've got it right here. The earnings are insane. And the price to earnings. So, it's looking fine snowflake wise. There's no dividend. There's no value. It's all, financially healthy. Past performance has been fine. Future performance is there. No risk detected. So yeah, it checks a lot of boxes, but price to earnings, outrageous. Outrageous. Okay. Current price is $80 and we're trading fair value 47. Where did I say I'd like to buy it? At that previous high at 45. So I just have to know that this value to me means I'd be willing to own it if it ever came back to that level. And if this fair value all of a sudden is $50 and $55, then I can move with it. But I never love owning what I think is highly overvalued stocks. So, and look, if Palantir crushes it this year and goes to $1,000, it's in the S&P, right? There's exposure by just having S&P trades. And the same thing is true on the NASDAQ. So, I mean, that's what NVIDIA has been for the last 10 years. I mean, the Qs have enjoyed a lot of profits, as has the Mag 7. But the indexes have enjoyed the cream of the crop that pushes those market cap indexes way higher. So you don't have to be a stock picker. It's exciting to say like, oh, I'm in Palantir. I've had it since $10. Well, good for you. Most people don't do that. So I just try not to lose sleep over it and not worry about it. All right. So yeah, there's Walmart. Let me go back into the chart. So I'm going to look to roll this out to March to June. That's not really what I wanted to do, but April. I mean, I kind of have to, right? Like April. April's requiring me to roll for a debit. So, okay. So fudge it. I'll go to 105 and I'll go to June. And now I can roll for a small credit, but it does give me $5 more of upside, and I'll take it. And if I come into June and Walmart's at $130, then I might roll it again and keep it at 105 and buy myself some more time. I'll sacrifice a dividend, but I can make another maybe 50 to 60 cents or $1 and ultimately let the stock go, but get it called away at a decent price. Okay. So anyway, I'm going to take this trade, see if I can roll this. So I've got my shares, I got my collar trade. I'm going to roll this out for 10 to 12 cents. Let's see if it'll fill. So 12 cents not filling. 11 cents not filling. 10 cents, please. I definitely don't want to roll this for a debit. So let's see. This might just be like a free trade, but I'm just going to try to increase it with the time. All right, it's got filled for 8 cents. So let me go into my tracker here, WMT. So I bought shares, added the collar. Now I'm going to update this tracker. Okay, so new collar rolled to the 6/20 expiration. So I have the 105 sell call and the 76.67. It's a weird strike. That's the buy put, and the debit on that buy put is around 50 cents. Okay, so let me see if I can match that trade. So who else has some exposure on Walmart? This one has 100 shares. What? What the hell happened to my shares, man? Well, that's annoying. Let me see. Fudge. All right. Fun discovery. I have 100 shares in this account, and I've got 3 contracts. So that one is going to need a little bit of help. So I've got the shares. Now I'm going to roll this. Let's see. Roll this out and up. Okay, so I could roll this 110 by 80 December. That takes up all the time for the year, though. I don't love that at all. I do have some protection on the downside. Roll this up $10. It's still threatened on the upside. I mean, that call is a 37 delta. That's very easy to get touched. Dang it. All right, let me go some other ones here. So this one doesn't even have a covered call. It's up $1,400. I'm going to go ahead and put on my collar trade here. So let's go to June. Let's set the 110 by 85. So if I do a 110 by 85, I have some time. I've got a put, I've got a call, 2 contracts for the 200 shares, and that would give me an extra $1, and then price can appreciate by $11 more. So that net position would be have the shares, get it called away. Buy price on Walmart is $91.42. Get it called away at 110. Let me do the math on that. So $91.42 minus $1.04. Get it called away at 110. Make $19.62. So I'll make $39.24 on that account. Not bad. All right, I'm going to take this trade. 85. That's still a little. I like this one a little bit more. All right, I'll keep it here. I'm giving myself a little bit more out of the money on the put side. Get $1 more. Hopefully, I get $1 credit for this one. This account then has a collar trade on. All right, let's try to get $1.04 out of this one. So this account is the right there. Okay, so $1.04 not filling. $1.03 got filled. So that is a 110 by 85 collar, and the 85 long put debit wise is $1.25. That way, if you do have a pullback, I can track that one. Okay, next account. No exposure there. This account. This account. This account. Okay, this one's collared out good, so I'll get a roll on this one. So roll this to June, roll this up to 105, and down to strike. Hopefully I'll grab 8 to 9 cents on this one. Try to grab 09, filled at 9 cents. Fine. No exposure on that account. This one has 222, good. All right, that's 336. Roll this out to June, up to 105, down to strike, 9 cents, filled at 9 cents. Okay, any exposure on this one? No. These are new accounts and new accounts. Okay, let me figure out what I'm going to do on this one. This one has 100 shares. I mean, I guess technically I can do this. This is a margin account, I can buy 200 shares more. I kind of hate to do that, but I can then get, yeah, I'll just do that. That's a lot easier than trying to roll this. It's basically one contract is covered, 2 contracts are naked, and I don't want that type of exposure. So I'm going to go ahead and just buy more shares. That'll make it easier. This is a portfolio margin account, so the buying power shouldn't be awful. So let me go long shares and buy 200 shares at 98.88, and then I'll do a roll on that entire position. So 98.88 sets me back $2,900 in that account. Let me make sure this is the right one. That is 9732. Sets me back $1,000. Yeah, buying power is not bad at all. Okay, so I'll take that trade for 200 shares and get filled at 88. Okay. Now I have 300 shares with the 3 contracts. Now I can do the roll and get this rolled out a little bit further. So if I do 100, lower the cost basis. Okay, get it called away at 105. That's okay. I might go out one more expiration here. August. I'm going to take this trade to August on this account. So I go 82.50. Still collect about 35 to 40 cents credit. Get it called away at 105. Put wise is there for protection. 63 cents. All right. I'll do the 105 by 80 on this account. This week I'm done. Like I looked at all the earnings plays I want to look at this week. We got some action going into tomorrow for closed out Meta for profit. Tesla, we got to have a big move tomorrow. Caterpillar went the opposite way of my liquidity level, and Palantir I've got for a trade next week, and a gap fill looking for Nvidia out to like March or April. So right now, I'll just reset. There's more Mag 7 next week, and I'll take a look at some fresh earnings. But going into tomorrow's expiration, there's not a lot that I want to look at. I looked at Chevron, I looked at Phillips Energy, right? So it's, what is it? Chevron, Exxon Mobil, and like ConocoPhillips. I looked at all those for energy plays. There's not else much going on Friday. Today there's Apple and Intel. I didn't like the prices of any of those, so I'm just gonna wait. Okay. All right, so this is a 105 by 80 for 60 cents. If I move this down, I'm just going to keep the strike there. That's a 10 delta, but it's trading at 97 cents. So we'll get this one traded hopefully for 9732. There's the collar. Okay, and put this trade in for 65. Try to get in for at least 63, 64, 63. Come on, Walmart. What? 62 not filling, 61. 61 got filled. All right. Now I'm updated. So account 9732, buy 200 more shares at 98.88, add collar and roll. So now I have the 8/15 expiration, 105 by 80 collar, and the 80 long put is 97 cents debit. Okay, so that one's going to have a slightly different break even. I have now my trade price. I'm curious if this averages them out. Okay, so it shows me at 300 shares with a trade price at 96.39. So if it's 96.39 for all the shares, and I collected an extra 60 cents on that trade, that was filled at 61 cents. Okay. Collar credit was 61 cents. So that break even would be 96.39 minus the 61 cents, so 95.78. So that gets called away at 105. It's that times 300 shares. I make 27.66. If I get behind it, I get behind it. But right now, that's a pretty good chunk of profit. Anytime I can repair a stock for like $2,000-$3,000, I'm pretty happy with that. A lot of times my repairs, I'm happy with $1,000 because I'm pretty nimble when we take on some ownership. So I like to take a stock, repair it. Maybe it takes 2 to 4 weeks. Maybe it takes a couple months. But I'm kind of always looking at that like $1,000 to $3,000 flip. If I really like a stock and I think it has some more potential, then I try to repair it, try to add some more rolls to it, and try to work that thing to like $3,000, $4,000, $5,000. So that's MicroStrategy is an example of that. That stock, if it gets called away in March, if we're above 310 in MicroStrategy, then that stock gets called away for almost like, I think, $4,000 per account. And I've got 4 accounts that are trading MicroStrategy, so that'll be a nice little chunk. The nice part is I'm happy to see I mean, for the week, I'm up about almost 35 grand for the week. 132 is the new P&L year to date. That's not a bad way to start off the year. I'm pretty happy with that, considering we're not at all-time highs. The market is broadening out a little bit, but I'm not like crazy positioned on anything. I'm just doing a lot of income trades. So FOMC inflation data, earnings out of the way. Most of the earnings aren't out of the way, though. They're not even close. We're not even close to having earnings out of the way. We are just getting started. So earnings, we have a lot more to go in earnings. I will show you. Look at earnings next week. So next week earnings, how many stocks report? So we had like 300 companies reporting this week. 33 plus 122 plus 146 plus 158 plus 23. We have 482 companies reporting tomorrow, or next week, sorry. Okay, how about the week after that? The week of 210. Look at that. We're just getting started in earnings season. Okay. I just found out, so I mentioned this. I'm going live with an earnings course starting on February 10th. So it is intentional, like the publishers that I'm working with Prosperity Pub. We know that the bulk of earnings season, yes, we have some Mag 7s, but we have so many earnings to still have for Q1. The week of the 10th, when I go live on the 10th for that course, we have 159 plus 308 plus 190 plus 166 plus 46. Yeah, we're going to have several more weeks where there's like 800 to 1,000 companies reported earnings. So yeah, there's lots more to go. So we're not even close, which is, it's going to be exciting. We will see what the overall consensus is. The markets, I said this a lot in Q4 last year. A lot of these earnings valuations, it is a bit priced to perfection. I think that as we watch the U.S. 10-year sitting here elevated at 4.5%, look, if this goes higher, it doesn't matter what earnings really gives us. This is going to make everything harder. Okay, if this goes lower, then yeah, we can see some upside potential. We can see some optimism come back in the market. It makes basically the cost of everything as far as long-term financing go down. This has been the crazy, wild, bizarro world where the Fed cut 100 basis points here, and the market did the exact opposite. That's the only time really in history that the Fed cut cycle has sparked the bond market to do the exact opposite. So it's not normal. There's no real way to model this outside of the bond market is saying that the Fed got it wrong. And we just have to know now, is it going back up to continue to show the Fed that they're wrong, or is it going to actually balance out a little bit better? I don't know. But PCE will be a big measurement. I shared this week. I don't think that it shows anything good, right? We've seen higher prints on CPI and PPI and PCE for that matter. But here's the previous print, and here's the forecast. So we're looking for the PCE price index year over year to be previous is 2.4. It's forecasted for tomorrow's print at 8:30 a.m. to be 2.6. That would be a higher print year over year. The Fed's primary gauge is this. Okay, that is the primary gauge. So you could say if you look at the core PCE, is it coming in hotter? So if we forecast 2.8, it comes in 2.8. I don't know if the market's excited about that because it's as forecasted. But if it comes in 2.9, that's probably not going to be a good thing. If the month-over-month comes in higher than 0.2, that's probably not going to be a good thing. This is the Fed's primary gauge. And that, of course, excludes food and energy. Right? And you've got some futures prices that are sitting at all-time highs. You got cocoa futures like crazy. You got live cattle like crazy. You got a lot of futures prices that are just breaking all-time highs. And, inflation is still out there. Commodities have had a pretty decent run to kind of churn things this year. Oil's had a really interesting last 60 days of trading. Speaking of oil, let me take a quick peek at it. I put on an iron condor on CL. We're trading at 72. Yeah, this is okay. This is about where I want it to stay. So I've got an 8150 by 8200, a 65 by 64. I'm going to try to pull out about, I got a 20-cent credit on that. I'm going to try to pull out about 10 cents debit or less, but I'll keep an eye on this one for the next 1 or 2 weeks. Okay. Gold is flaying. Yeah, gold is saying inflation. Yes. Okay. Gold is, and that, it's not just saying inflation, but I also think it's showing safe haven. Coffee, that's another one, Jonathan. Yeah. Yeah, coffee and cocoa. I mean, cocoa's not all-time highs, but it had a ridiculous run. It like pretty much broke in 2024. Live cattle, showing really high prices. So if you look at coffee, sitting here at all-time highs, you look at live cattle futures. I mean, look at this thing. Since COVID, way higher. I mean, I don't know. What's the cost of a hamburger, right? It's up 166% since COVID's bottom. Cocoa, CC. I mean, cocoa went from this in 2023 to up 375%. That's not normal. So I know it's not everything. What about orange juice? Orange juice. Look at this thing. Since 2020. You like your Minute Maid, you like your Simply Orange, 474% increase in orange juice. Crazy, right? If I was more of a futures trader, like this would have been an exciting time. But I trade mostly options, and I watch, but it's a whole different ballgame. But there's crazy stuff going on. Poultry. Is that the technical? Is it poultry futures? No. Chicken? I don't know what it is for poultry. I just know live cattle. There's pork. There's lean hogs. So you can have lean hog futures. A lot of chop here. So anyway, gold. So like I said, I don't think this is much of an inflation play as much as it is a safe haven play. Gold is getting bid for safe haven. I think this is a non-dollar play. I think this is a safe haven play. I think that's why gold is pushing higher. Now, I say that, but remember, I think this bar count on gold technically does mean something. So I'm not looking at gold as this breakout because I think we might end up faking this breakout and coming back down. I mean, if we don't, we don't. And I'm still long on gold, and I love gold to the upside. And I'd like to take this up to $3,000, and that's my profit target for 2025. If we hit 3,000, awesome. Okay. But if we go sideways, then I'm looking to add more exposure and see if this will maintain its bid and support, and then we can end up breaking out later. But if this just runs, again, how can gold be going higher and the stock market is still sitting near all-time highs, at all-time highs? Dollar, I don't know what the dollar is going to do, but I think it's going to get a little bit weaker in the interim. But Bitcoin is still pretty darn resilient. We got the indexes near all-time highs within 3 to 5%. And if gold goes like breakout behavior, fine. But I don't know how this shows safe haven, and yet the bond market's not doing anything, yields aren't really doing anything, or they're going to go in like the opposite, kind of non-correlated direction. If gold gets strong enough, then we're probably going to see something like the equities market crack, or something's going to flinch. And that's probably my biggest concern for 2025 is that something's going to flinch. I don't know what it is. I don't know if it's US versus China. I don't know if it's AI being overvalued. I don't know if it's AI, we don't have the energy to support it. I don't know if it's, a $6 million deep sea program that's going to pretty much dethrone everything we're doing for large language models and open AI in general. I don't know if it's going to be something with Trump and geopolitical risk. I don't know if it's going to be, I don't know. Right. But I do think that the last couple of years have been fairly smooth. We've had some hiccups, right? We had the Japanese yen last year with the interventions and raising rates are the only central bank raising rates right now. So, I mean, something in the currency side could change. Gold looks pretty good. Gold looks really good to have on the balance sheet regardless. I like gold. I like gold long. I like silver. I like silver long. I like Bitcoin. I like Bitcoin long. Am I crazy aggressive on all of them? No, I'm just properly positioned. I mean, I've got about a 5 to 10% exposure between that basket of gold, silver, and Bitcoin. And I am happy with that. I think that's a good chunk where if we have some good performance, awesome. I think silver is a good measured move. I think silver, I'd love to see it up towards 36 and up into the 40s. But something is not going to be great or awesome if silver is up to $40 plus or going to my measure move at $47. this isn't going to be good for a lot of things. Like there's no way that gold goes to 3,000 and silver goes to 45 or $46 and the equities market is just, hunky dory moving higher. Okay. Why is the dollar going lower? Um, well, I mean, right now we're still looking at the Fed cutting rates. And I'm saying dollar weakness in the near term, but it's not enough for me to trade it. This is not something I want to short on the dollar. I think the dollar right now, if this gets beat up a little bit, we come back down to support. It cleared the highs. It cleared the highs. This would be an accumulation spot for the dollar to go range bound. I think we have a range bound trade. Okay. I firmly believe that 2025 is more of a trading year than it is a breakout bull market or bear market. I think this is going to be a grind fest, and we got to figure out how to pick our battles and make sure we're not overexposed and make sure that our risk and reward is favorable and we play the probabilities and you play quality. So I don't know what the big breakout is. I don't know what the big moves are. I don't know if we have any of them that we did in the last 2 years. So I could see a lot of range bound trading that we have to survive, which is why I'm just being patient. And the fact that I'm out of the gates with some decent profit for the first month of trading and not really taking any ownership or any major positions, I'm okay with that, and so I will just kind of continue to do that. Hopefully it is going to work to my advantage. Now, if I'm seeing more signs of trends and more signs of breakouts and more signs of, sentiment and optimism, I mean, let's take a look at, I haven't looked at this in a moment, but sentiment survey, let me go into Edge Finder. Let's have a look at a couple things. So right now we are sitting at 41% bullish to 34% bearish. 52-week high, I believe, was in the 50s. Yep. So the 1 week high, or the 1 year high rather, 52.7, and that was a bit of a signal of a top in the market. That was back in like July, so that was really like the top in the market last year. So I thought that was interesting. Any type of flows coming out? Let me see if this ETF inflows. See if I could find a free inflow. I thought about subscribing to this actually, but if I go SPY, let's go weekly. SPY QQQ. Okay, let's submit. So right now, as of the 27th, we see inflows. We've had, wow, that's crazy. 1, 2, 3 weeks of outflows in the SPY. More money get dumped into Qs. Interesting. So we do have positive flows, but the SPY has been hit a little bit harder, which is surprising. I wonder if this outflow came right after we hit that all-time high. So we had our sell-off early January. That's why we were down, 5%, and the Qs were down like close to 6, 7%. But then Qs have had a little bit more love, probably this AI trade. Look at this market dropping right now, by the way. These final, 20 minutes, this thing is dropping fast. So there's still your 610 level, the 600, the 595. Just a lot of volatility, man. So tomorrow's PC is going to be interesting. Yep. But inflow wise, like, okay, this is not nothing. Outflows of the major indexes. I don't know if that's going to be people like leaving equities going to bonds. Could be, but we're not really seeing that price reflected in bonds. Yields are still sticky. Bonds are still flat. I mean, I think they might be up a little bit for the year, but minor. So anyway, I'm looking at dollar index, right? I think the dollar index is still pretty well supported. That's 106 to 105.50 area, right? So this is not a spot that I'd say I'm short the dollar. I'm not. Okay, what I'm looking for is if this area holds, then I would say the dollar resiliency is still there. If we have a swing and a flat pattern, I wouldn't look at I guess you could look at this as if we come to 105.50 or 10600, look for an opportunity in the near term to time that dollar position. I think that's a good chance for profit. If it range trades, maybe one more time, and then we see if this dollar is actually going to go, back up to these levels. Okay, dollar getting stronger is bad for equities. This would be risk off. Okay, dollar breaking below 105, this is risk on. So until I see more clarity as far as like the macro picture, I'm not trading really any major dollar stuff. I'm dollar cost averaging in here and there. I think the dollar had a crazy good run. I know I'm early. I'm early to Aussie dollar. I'm buying Aussie dollars a little early. I'm long on New Zealand dollar. I'm a little early. But my dollar long also served me very well with dollar Swiss position. I took profit on that one. Dollar CAD position, I took profit on that one. Pound dollar, I got out without any real scathe. I lost like 30 pips on the pound dollar. Euro dollar, I haven't touched. Okay, do I see the spike on dollar CAD? Well, that was because of the BOC today. Bank of Canada cut rates by another 25 basis points, and so we're breaking higher. And I'm telling you, man, I know there's probably a ton of traders that are sitting here holding this dollar CAD short, hoping and praying that this thing comes back. Look, Bank of Canada is in a much different position. Canada as a country is in a much different position. I don't know. I don't want to wish ill will on Canada, but I don't think their economy and their currency is going to do very well right now. So, I mean, I say that we've already gone from basically 3,200 to 4,400. So it's not like I want to buy this. But I will say that would anyone be shocked if this thing goes to freaking 1.50? I mean, I will say that if it goes to 1.50, either this is the fake out spike where this thing goes up to flush out all those stop losses and then crash back down, and that could be the top in the dollar CAD, or this thing is in another dimension of breaking out. And I don't know yet. Okay, I don't know yet. Okay, look, there's got to be a headline going on. We've got a pretty big drop going on right now on SPY. This thing has dropped in the last few minutes. I mean, it's down 4 points in the last 2 minutes. That's a 40-point drop in the S&P. Look at this Russell. Look at this thing. All right, we got to have a headline somewhere. Somebody look it up. We got some financial juice. What's going on? What is going on? 25% tariffs on Canada, Mexico. There you go. Trump says, I'm to announce Canada, Mexico tariffs because of fentanyl. You voted him in. You signed up for 4 years of hearing this guy talk every day. This is what the market does. Okay. Response and indications that the largest economy in the world's main engine is still strong, which is encouraging for corporate America. But right now, we've got a crazy reaction based on tariffs. That's 3:36 p.m. So that's literally 10 minutes ago. And there's your 25% Canada, Mexico because of fentanyl. Okay. Whatever that means. Yep, I hear you, Evan. I don't hear a lot of good things coming out of Canada, and I'm sorry for all the citizens there. I feel bad for whatever's happening in the real estate market. There's no such thing as 30-year fixed mortgages there. It's what, every 5 years, and then you go to market to refi, and then it's like you could be stuck in like interest only expense payments, and just it could be brutal. So I don't know. Financially, there might be a lot of stuff happening with U.S. and Canada in the next 4 years, 5 years. Who knows? But my point is, look, let's just think about the technicals for a second. All right, this is a big spike up. We had BOC Wednesday. They usually do it on Wednesday, right? So if this is a liquidity flush, this could be a lot of manipulation right there, right at that high. So the market like flushes that liquidity out and then comes back in and then reverses, and all of a sudden we have a swing opportunity to go back down. So if that is a liquidity flush, cool. I wouldn't trade it yet. I want to see if price comes back down to build up some type of head and shoulders or crown pattern. Then you look at this area to see if this thing goes from a low to a high and it finds some type of balance, right? Because if it doesn't come back down here, if I put sell stop levels and I get paid on that, awesome. If I take a swing trade, I put risk to reward, that's fine. But if this thing doesn't break these lows, like we're talking about higher highs, and it just keeps going. But I don't know yet. Okay, so we'll find out. But watching this, so we've got the last few minutes. Let me take a look at SPX. And the bad part is I tried to do a broken wing butterfly with a 6100 pin, and I still didn't get filled in that stupid trade. It's not going to get filled. I mean, I've had it pending all day. SPX, 50 cents, 50 cents. Neither one got filled. I mean, they're worthless, so I'm just going to cancel them. That was a pending order, and that's a pending order. Okay. Now, if I had anybody in my daily profit play that was sitting in that 60-40 by 60-30, how good do you feel right here? You probably feel like absolute garbage. Okay, this went from trading from like 30 cents debit to now back up to $2, and we're going into the very last part of the day here for the last 13 minutes. Now, you might get lucky, have this thing cash settle and be fine, but holy volatility, Batman. So we still have PCE tomorrow. I'm telling you, I still think you need to write this level down. 600 on the SPY, 595, 590, or back up to 610. I'm hoping that the market on Friday, with PCE is going to be a bit of a reaction, and I don't know if it's up or down. I'm just trying to figure it out. But that is a lot of wild stuff here. Let me see if there's anything. Can I get a 6100? I doubt it, but I'm going to find out. 6100, probably not. Nope, there's like zero bid there. I was just trying to grab a few bucks at the end of the day. What's this recent high? 60.85. Nope, it's like you just get nothing for it in the last. I mean, I get it. It's 12 minutes left, but like 60.75. If I want to take a crazy risk, I could throw. Man, you're just in the noise. Never mind. I was wondering if the premium was high enough. I was like, maybe I could just throw a little bear call spread right there, or put a bull put spread down here. But I don't think I'm going to get any premium for it. So we'll see. Down to 6,000. Anything at 6,000? Nope. So there's no bid price. So never mind. But that is a lot of wild noise here the last 20 minutes of trading. Okay. So we'll keep an eye on that. Where does this take us for the week? IWM. Look at this sucker on the day. So I mean, darn near came down to fill the gap out of nowhere. You got perfect cooperative little gap up, little tiny drift up to the the bullish side today, and then just dumps. I mean, quick liquidity grab, but look at that thing. Just noise, man. That is a lot of noise on ES, a lot of noise on NQ. Again, a very choppy day. I mean, we had a little bit of a breakout this morning. This would have been my 9:30 candle. A little breakout right there, and a little breakout right there for all my futures traders. What do you think of high tariff policy? Nobody knows. I mean, nobody knows, right? I mean, look, the market has been concerned with the uncertainty of what tariffs do. I mean, we don't know if we're putting tariffs on. I mean, look, we're putting it on allies. Hey, Canada, hey, Mexico, 25% tariffs. Hey, anybody that wants to make stuff in the U.S., we'll treat you well, but if you don't, we're going to charge the crap out of you. Here's tariffs. Russia, sanctions, China, tariffs. It's inflationary. It's just pretty simple economics. I mean, look, some stuff probably needs to happen, but as we knew back in 2016, sometimes the guy likes to make some threats. So we'll see what it does. Is this mostly bot trading? I don't know. I mean, if anything, this is market makers, right? What happens to market makers when this type of aggressive price happens? What they're doing is they're going to delta hedge. So if market makers are making money by defending this level and defending this level, when you see an abrupt movement, what they're doing is they're going to be selling shares into those sell puts, right? They're going to be selling shares into those sell puts. So if they are hit on one side, they are hedged properly to be delta neutral. So yeah, you're going to look at some quants and algos and other things that are doing some crazy amounts of actions here as the last 15, 20 minutes of trading. Never something I'm going to be doing. But this is why when I'm trading, I'm trying to get any type of day trade profit earlier, because this is way too much crazy stuff that happens late in the day that you have zero control over, and all of the prices are really, really sensitive. Yep. So anyway, we'll see what tomorrow gives us. But right now I'm looking at a pretty big level here, 60, 20, and 6100. If I go to the SPY, we pulled back a little bit of that. So that 60, that's still a pretty big level there. 610 is still valid, depending on what the PCE reaction is tomorrow. I did see the 595 and the 590 go bye-bye for now. We'd have to have like a nasty gap to the downside for those to come back into reality. But I still think like 610 somewhere. Like I would hope price doesn't go nowhere tomorrow. I'm hoping there's a bit more of a catalyst than just we're going to stay sideways. But sideways isn't bad for some of my iron condor trades and some of my 30 to 40 to 50 day basically synthetic strangles. It works okay. The choppier the better. I just need a little bit more time. I just don't want to see price breaching all-time highs. So it's fine. Anyway, guys, I guess it got exciting for 5-10 minutes. Look at that thing. Just big drop, big up, big drop, big up. Russell down, pulling back. SPX down, pulling back. SPY down, pulling back. Q's down, pulling back. Like, it's just noise, you know? And to a day trader, it's absolute chaos. But to, does anybody care that the market started here today and it closes here today? No. Like, most people don't care. Like, oh, look, the market's up today. Cool. What's for dinner? you know but when you see this stuff every single day, in the last 10 minutes are like, oh my gosh, that's crazy. Yeah, I mean, this is what the market can do. PC tomorrow should be 8:30 a.m. So if we go to the calendar here, what am I looking for? PC tomorrow. Core PC tomorrow morning, 8:30 a.m. is the drop. I will be watching the futures market. We're likely going to have a large 8:30 candle. So I might be looking for some futures trades, some future breakouts, maybe some flow one way or the other, or just a big candle, and allow that candle to serve as my, if we have one big candle tomorrow morning at 8:30, then I'll look to see if price breaks lower or breaks higher. Okay, so there's opportunities to trade. If we get a fresh break of that, you can trade the bearish breakout, you can trade the bullish breakout, or you see that price will do this a lot. Bounces here, okay, bounces here, right? So either we have resistance or support on the actual candle itself, or we have a fresh break for more direction on the day. But 8:30 a.m. tomorrow for PCE. For earnings, I want to take a quick look at earnings for next week. There's our, oops, let me reset that. There's your inverted yield curve. Let's go to the inflation data. Here's your core PCE. So very little improvements on the inflation front for the last, I mean, what's scary is almost 2 years. Isn't that crazy? In almost 2 years, we have seen very little improvement on core PCE. So the last 1, 2, 3, 4, 5, 6 months, the last 6 prints, that was our low point. And so I don't believe that we are trending in the right direction. I'm hoping that this isn't a trend, but more just like noise to come. And maybe the market is okay with that. But if we start continuing to show that we're just going higher, right? What's the forecast for our core PCE? 2.8, right? So forecast 2.8, or that was the print for December. Our forecast for, let me go Bloomberg or that screenshot here. Forecast at 2.8. Okay. So the market is forecasting 2.8. If it prints 2.9 or 3%, we are another data point of showing we are trending the wrong direction. I don't see the market liking that too much. UPS, FedEx, like too much drop. I looked at FedEx this morning. I looked at UPS this morning. So UPS dropped a ton. I looked at some option trades on UPS. I didn't get what I wanted, so I didn't take any trades. But we did have a bit of a harsh reaction to the downside. I think there was a revenue miss revenue miss on UPS. So I was looking to see, UPS back down to COVID levels. Let me change the freaking color here. UPS back to COVID levels. I was looking to see, okay, well, if we come back down to like $100 or $90, these COVID levels are like in the 80s. Okay, this low is $82. This chunk of price actions around $92. If we're under $100 on UPS, I'm probably interested in buying. Okay, so if there's more follow through here, I'm okay looking for a gap fill. But this is, I think that it's got to be quality over quantity. And if I look at UPS versus FedEx, there's no way that I think UPS is a higher quality company than FedEx right now. And look out a little bit longer term on FedEx. I could see FedEx also being very much range bound for a while, where it doesn't really go higher. Perhaps this trend ends up breaking and we start to see more pressure. So I'm not convinced we go too much higher. We might have a lot of support down here. There's your COVID crash. So I could see range bound. In fact, if we do hit these highs, I might look at a bear call spread or a debit spread to short, with defined risk, but shorting FedEx at those highs. So let me just be mindful of like a 300 to 310 resistance level, and then big buy zone around 150. But looks very different. But I didn't get the trade I wanted on UPS, so I didn't take it. But yeah, I talked about that earlier this morning. All right, equal weighted looks pretty good. Put in a couple buy levels. Hopefully we see more upside there this year. Maybe. Okay. So anything else? I'm making a determination on oil tonight. Okay. We have all the lumber we need. So is that saying to Canada, we don't want your lumber? First Canada-Mexico tariffs are coming Saturday. Okay. Well, Friday to Monday could be very interesting. Oil tonight to do what? Call Saudi Arabia and say we want cheaper oil? All right, man. Look, buckle the F up. There's going to be a lot of volatility here if that is what. And look, it's just market sensitivity. That's all it is. Like, is Trump really responsible for any of this stuff? No. But he is going to be the most vocal about it. So whether or not he can actually get the job done, he's going to be vocal about it. So if he's determined on tariffs, he's probably going to make a bunch of noise about it. If he wants oil to go lower, he's going to make a bunch of noise about it. If he wants the Fed to cut rates, whether they do or don't, or they even listen to him, he's going to make a bunch of noise about it. So the market is going to be super sensitive to all this stuff. So again, risk management, probably the most important thing. There you go. Okay, we got 1 minute for the close. And yeah, I want to take a look here for earnings. Where was it? There we go. So Intel is after market today. Apple's after market today. Here's where we are at. So for this week's trading, Thursday after market. So we have Baker Hughes, we have Weyerhaeuser, Apple, we have United States Steel. We have, I'm just looking for some notables here. Visa, SkyWest, Intel, MasterCard. That was all before. Okay. So I'm looking only for after bell. Yeah, Intel and Apple both after bell. SkyWest after bell. So yeah, we'll see. And tomorrow's PC. Okay. So that'll do it for today's final hour. I appreciate you being here. If you're watching on the youtube.com/Chris Pulver or youtube.com/Financial Wars, kindly hit the thumbs up button. If you haven't subscribed to the channel, feel free to do so. Financial Wars, that YouTube channel is not just me. There's others of us. So Nate Tucci's on there. Graham Lindman's on there. I think Roger Scott jumps in every now and then. Kane Shea will jump on there every now and then. Jeffrey Turnmeyer, maybe Lance, maybe not Lance Ippolito. So anyway, it's channel. We've got 166,000 subscribers. My little guy's got about 9. But I'm here to help. It's all about a labor of love. I could care less about the YouTube trend hacking because it's impossible to figure out. But if I have some organic traffic and people following and liking the videos, that helps. So I do appreciate that. Same thing on Financial Wars. But yeah, let's do it again tomorrow. Nice, John. Okay, thanks everybody. Have a good rest of the day, and I'll see you tomorrow. Thanks, bye.